name is Brad Muniz, and welcome to Sobel Insights. Sobel Insights is a series where we introduce some brief information on various topics. We like to keep these sessions to 15 minutes. At this time, we do not offer CPE. Today's topic is retirement plan selections. Scott Feit with Prime Pensions, Inc. is our presenter. And Scott, I talk with a lot of sometimes smaller companies, sometimes bigger companies, and they don't know what plans get into. There's so many plans that are out there. So what they usually do is that smart choice of just saying, I'm going to just go to the bank and open up an IRA, and they get that whopping, I always say 5,000 because I'm an older person, but $5,000, $6,000, $7,000, a year. And that doesn't seem like the best retirement plan vehicle, hoping for your IRAs to grow and Social Security. So I know there are a lot of plans, but what are the different type of plans if you can help us for the companies?
Sure. And thanks, Brad, for having me. I appreciate it. So there are different retirement plans that the IRS allows. And the purpose of these retirement plans is really for business owners to put away money for retirement and let that money grow tax deferred. At the same time, they get a deduction, which will, at the end of the day, it will lower their taxable income. So we commonly see, business owners, if it's just one person, to set up a SEP. A SEP is a simplified pension plan where business owners could put away up to 25% of their income, no more than the IRS maximum, which is currently about $58,000. And that increases each year. At the same time, once you see that there are employees involved, they'll set up something called a simple plan. You really don't need a third-party administrator, someone like myself, hence the name. It's simple. There's not much going on. But business owners can't put away as much in a simple plan as they can in other types of retirement plans. So with a simple plan, there's a limit of $13,500 of 401k money that can be deposited, plus a catch-up if they're age 50 or older. On top of that, there's small amounts of company contributions that are required to be put in. But most of my clients, what they would do is they would set up a 401k plan or a defined benefit plan. So a 401k plan is a great type of plan for small businesses. It allows the owners and the employees to contribute money out of their own paycheck. They can contribute up to $19,500, or if they're 50 or older, they can do an extra catch-up contribution of $6,500. On top of that, the business owners could put away company money up to a total between their 401k and their company, they could do $58,000. With 401k plans, there are ways to set it up with matches or profit sharing contributions to really take care of the employees, but also the business owner. And then if clients really want to get creative and put away a significant amount above the IRS limits of $58,000, then they'll set up some type of defined benefit plan. The phrase today is cash balance plans. Cash balance plans allow business owners to put away a significant amount of money, $100,000, $200,000 for themselves, and not have to give a lot for their employees. So these plans really are set up for the key people, management, or the business owners.
Great. And now this is not a tax seminar, but I know that there are some tax advantages or incentives. For last year, they were giving credits for companies setting up plans and putting plans in place. Because I know while you're talking about the business owner, the goal for the government's view is they want people to be putting away for retirement and not rely on Social Security. Correct. And encourage people to put into some sort of retirement vehicle. So you just mentioned 4 plans that I can think of, and you dove in a little deeper. How does a business decide? What decision process do they go through to choose one of the plans, you think?
Sure. And this is really where the business owner needs a consultant, someone that's qualified. Our firm, we specialize in this, and there's a lot of other third-party administrators that do this as well. We normally gather some census information. We want to know who's on the payroll, the dates of hire, dates of birth, which is very important. And from there, what we do is we do different types of scenarios. If they set up a SEP, how much would it cost them? Usually if there's employees, the SEP doesn't work because you have to give your employees who are eligible for the SEP the same percentage of pay that the business owner gets. And it's expensive that way. So we would normally look at a design like a 401k plan, or possibly a defined benefit plan on top of that if the business owner is looking to put away a significant amount. So what we do is we model out what they can expect their cost to be, depending if it's a type of profit sharing, if there's match, or if there's something called a safe harbor feature with 401k, just so there's no surprises from the business owner, and then they can see at the end of the day, the business owner may be able to put away 90% of the contributions for themselves and give some money to the employees. The advantage of doing that is that if they didn't have the retirement plan, they're going to take this money and report it as income. And then they're going to take that and they're going to have to pay taxes and give it to the IRS. So instead of giving the money to the IRS, they're giving some goodwill to their employees. They're shifting some of the money to the employees by giving them in terms of a profit sharing or match, and the business owners will get the lion's share of the contributions. So really what we do is we get the census information, we run different scenarios based on what the goals and objectives are of the business owners. We present it to them, and then from there, the business owner can decide what's the best type of plan, which we'll have a discussion with them, what their obligations are, and what are the requirements that they have to do each year or each payroll for this specific type of retirement plan that's set up.
And it's interesting you say that. You said about the SEP, and I have anticipation where you're going to go with the next, with my next question, because I have a lot of self-employed individuals, no employees, and I always ask them, are you putting away for retirement? Oh yeah, and it goes back to my original opening comment. Oh yeah, I'm putting into my IRA, and
Right.
I have my spouse on it too. They have their own IRA, and there's definitely a better retirement option. And I'm not picking on IRAs; they serve a purpose and are very
Right.
important. When my children were younger, I said to them, you had a small job, put into an IRA, and they said, I don't want to think about retirement. I said, it comes quick, so
Yeah.
start young and put in for the IRA. So it's not just for children, but there's other good uses for it. But a self-employed person without employees, what's the best retirement vehicle or option you think that they should be considering? I don't say definite, because
Sure.
they should talk to you, and what should they be considering?
Sure. So yeah, you're correct. I mean, IRA, they can put in a couple of $1,000s. It's not significant. But if they're looking to put away a substantial amount, up to $58,000, then a SEP can meet those objectives. It really depends on what their income is. If their income is over $200,000, then yes, they could set up a SEP. They can put away approximately $58,000 a year, and they don't have to deal with a lot of administration. It's a very simple plan to administer. But if their income is less than $200,000, then we normally recommend a 401k plan, because not only can they contribute 25% of their wages to the company portion, like they can with a SEP, but they can also put the 401k piece on top of that. That can allow them to put away possibly another $26,000 if they're age 50 or older. So now they can get almost $64,500 into a 401k.
Wow.
But we do have a lot of one-person companies, solos, sole members, where they want to put away more than $58,000. What happens if they want to put away $100,000, $200,000, even possibly $300,000 a year, which will substantially reduce their taxable income? Then what we may do is we may couple a 401k plan with a defined benefit plan. And that way that would work is in the defined benefit plan, we can write a formula where they can put away $200,000 a year. On top of that, if they're having a really good year and they want to put money away into a 401k plan, they can do so. The 401k plan is discretionary. So year by year, they can decide, do they want it? The defined benefit plan does lock them into some contributions each year. They do have until the filing of their tax return with extension to put the money into the defined benefit plan. So it does give them plenty of time. Some of my clients put in a lump sum early on because they wanted to work for them in the market. Others do some type of dollar cost averaging where they'll spread it out from the beginning of the year up until the time they file their tax return. So basically, for a self-employed individual, if it's one person, or maybe if it's a person and a partner or husband and wife, we typically see the 401k plans, possibly with the defined benefit plan, to maximize what they want to put away. One thing I do want to mention is with these defined benefit plans and 401k plans, if you are a husband and wife or spouses in a retirement plan, or if there are partners, you don't have to put away the same dollar amount. With a SEP, you are required to have the same percentage of pay. And that's a limiting factor that a lot of people don't like about SEPs if there are partners. With the 401k plan, two partners can have different dollar amounts. One can maximize, and one may decide they want to put in a very small amount, and that's allowed.
Okay, that's great. I didn't realize the diversity that's available to them. And the 401k, we see a lot out there, and that we do a lot of audits with Liz Harper, you work with. We do a
Sure.
lot of audits of 401k plans because they have over 100 eligible participants. Other than that, and you were mentioning smaller companies before that probably wouldn't have over 100 employees. What must be done on an annual basis with regards to these plans?
Sure. So really the process is, after we did that study and we figured out what's the best type of plan, there's legal documents that have to be set up that can be done by an attorney or someone like myself that's a third-party administrator. We set it all up. Each year, businesses, when they have questions, when employees are eligible, can they take loans, what is the vesting on the plan, they would contact us and we would have conversations with them throughout the year. But the main things that have to be done is once the year is over, a firm that's a third-party administrator would calculate how much money they have to put in for their employees. Is it a match? Is it a profit sharing? And we go through different scenarios to try to maximize the benefit of the owners or key people management. Once the decision is made by the business owner, how much they want to put into the plan, they have to just make sure that they do put it in before they file the tax return so the deduction can be taken. On top of that, retirement plans do have a tax return specifically for that plan that has to be filed. So that form is called a Form 5500, which basically goes to the IRS and the Department of Labor. That can either be done by an accountant or it's done by a third-party administrator. We take care of that for all of our clients. And that Form 5500, which is a tax return, has some statistical information that's provided to the government, how many people are in the plan, how much money is in the plan today, what the market value is, what are the flows coming in and going out of the plan. There's a lot of characteristics that the government tracks so they can see how many people really have what type of retirement plan that's out there. So there is some work. It's not overwhelming. By using an outside consultant, then it minimizes the amount of work that the business owners have to do. We know they're trying to run their business and they don't have to deal with the day-to-day. And that's why they can, rely on someone like yourself or myself to do a lot of the work. And as you mentioned, you're correct that when someone gets close to 100 people, we're notifying our clients, making sure that they're aware that when we file that 5500, that they can need an audit report by independent certified public accountants like yourself. It's just another requirement that the government has when you file that 5500, just to make sure everything is done properly.
I appreciate you saying that because, as you said, as you indicated, and I said earlier, we audit a lot of the benefit plans that are required to be audited under, DOL requirements. And that's our specialty, that's our area. And we know about some of the plans. I was familiar with a lot of these plans, but we don't know all the specifics. And I strongly recommend all the viewers and people that are, even if you have a plan, you should be talking with a consultant to see if this is the best plan for you. I've seen defined benefit plans that are frozen because it's just not working for the company anymore. And this is not something that you should just jump into immediately. It's talk to somebody like you. That I know that your company, and you and I spoke about your partner that I've worked with many, many years ago. You guys, when you work with a company, you talk to them about not just today, not just tomorrow. You got to talk about the long term. Because you go into the defined benefit plan. It's, you saved $300,000 this year. You're going to have commitments going forward. So are you ready for that commitment? And let's talk near term, long term, everything. What are your goals ultimately? Talk with the professionals, and Scott, you are one of the professionals that they should be speaking with. Absolutely. Absolutely. So those are the questions I have. I really appreciate the information, and I'm sure that the viewers got a lot of information from this. I'm telling you, I did, and I work with these plans on a regular basis. So I want to thank you for presenting today, and I encourage everybody to reach out to Scott at Prime Pensions Inc. Thank you.
Thanks, Brad.